Hey everyone, thanks for tuning in. Let's begin another trading video. For this particular trade, I'm establishing a short bias based on an analysis of this 10-minute chart. Now, from the outside looking in, I think it's easy to either disregard or underestimate the action in this time frame. However, when you really take the time to closely analyze it, the amount of detail and insight into what's actually happening in this particular price stretch over here, it's rather intensive. And as always, it's all about identifying key levels, pinpointing when to buy and sell, and keeping an eye on the big picture. Also guys, keep in mind that to trade price action the right way, it is essential to understand the past movement of the price and recognize at the same time which phase the market is currently in. And I know it sounds complicated, particularly if you are new to day trading, but believe me, it is not. All you have to do is familiarize yourself with the Wyckoff method, which I think is an easy to grasp market cycle based strategy that can be put into practice by traders at any level. Once you understand the principles of Wyckoff's market approach, analyzing charts accurately becomes simple. And one more thing on the subject, guys, and I hope I won't sound like a history book here, but Wyckoff's market principles are obviously timeless, forming, in my humble opinion, the cornerstones of successful trading. In fact, and as we all know, Wyckoff's groundbreaking theories have been revolutionizing trading since the early 1900s. Yet, some are not willing to give the guy credit for his brilliance. What's more, which is obviously unfortunate, is that there is an increasing practice of people out there simply renaming Wyckoff's concepts and claiming them as their own. The thing is, one can try to dress up the man's original ideas by using new terms or come up with, flashy marketing slogans and so-called new concept. However, and as we already know, nothing beats the genuine article. Furthermore, this sort of intellectual practice, quote-unquote intellectual, is, I think, unfair, unjustified, and more importantly, threatening to the integrity of trading. Wyckoff students, and in fact all traders with even a basic understanding of trading can certainly recognize the difference between those that do acknowledge Wyckoff's remarkable legacy to our current market understanding and those that are simply trying to pass off someone else's wisdom as their own. So don't be fooled, gang. Stick with what works and study up on the original master trading guru himself. Alright, back to where we left off on the chart. So as you can see, we have a nice consolidation area down here that's followed by this slight dip before the market experiences an impressive surge upwards. This powerful spike is then fueled by the formation of this order block, which, as you know, is a market behavior that represents the accumulation of orders by Wall Street's big boys, known as smart money, who control the market. A sudden bearish shift in market momentum after a relatively prolonged period of clear upward direction follows. Obviously, reversals are neither arbitrary nor happen by accident. In particular, this higher high action up here was clearly a stop hunt expedition and a reversal waiting to happen, which came obviously as a result of a liquidity accumulation phase. As you know, liquidity grabs are strategic, smart money moves designed, particularly after this fake breakout up here, designed to lure out whatever traders remain in a particular area. So after a plunge of 35 points, our price chart begins to show signs of recovery. It looks as though the market is embracing an uptrend here, successfully keeping it going for a while before sliding sideways for a bit, only to start diving down again after breaking support at the 40-30 level. Obviously, this area down here becomes a strong point of interest for me the minute price breaks into the order blocks range formation area without breaking the order blocks base before retracing higher to test the 40-30 level. Now, the determination whether the price is going to move higher or lower at this point is clearly based within the dynamics of this support and resistance range, which does provide me with a realistic entry point. And the reason I say this, and let me transition here to a 1 minute time frame real quick. So the reason I make this argument is due to the fact that we have now entered a trading zone where price has clearly demonstrated its inclination to sell off. So based on all these factors, I decided to enter the market short. Now, in hindsight, I should have made the entry right below the 40-30 resistance level. However, I honestly didn't expect the market-making side would match this 10-point or so dip in price by reversing it by an equal amount. Obviously starting at the 40-21 level. Well, I guess market makers will do what they do best, which is confuse you, and that's obviously putting it delicately. And separately here, guys, if you want to find out more about order blocks or block orders, are the same thing, doesn't matter, then watch this video for a better understanding of this effective pattern. Alright, that's it for today. I hope you all took away something valuable from this video, and if you guys did, please make sure to like and subscribe to the channel. I would really appreciate it. Thanks again, and until next time.